Welcome to the World Wire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. The fragile truce between the United States and China has shattered, sending shockwaves through global markets and reigniting fears of a prolonged economic standoff. On October 10, 2025, President Trump announced a sweeping 100% tariff on all Chinese imports, effective November 1. The announcement, made during a high-profile press conference, stunned both Wall Street and Main Street, signaling a dramatic shift in U.S. trade policy. This move instantly doubles the cost of Chinese goods in the U.S., from everyday electronics to clothing and toys. Electric vehicles, a fast-growing segment, are hit especially hard, with prices expected to skyrocket overnight, putting them out of reach for many American consumers. Combined tariffs on Chinese EVs will now reach a staggering 75%, nearly blocking them from the U.S. market entirely. For Chinese automakers, the American dream is suddenly slipping away, as their vehicles face insurmountable barriers at the border. Just months ago, both countries had eased tariffs, sparking cautious optimism for stability and a possible thaw in relations. Business leaders and investors hoped for a new era of cooperation. But beneath the surface, tensions lingered. Disputes over advanced AI chips, accusations of intellectual property theft, and rising shipping fees signaled that the peace was always temporary, a fragile pause in a much larger struggle. The new tariffs mark a dramatic escalation, shifting U.S. policy from targeted pressure to a sweeping economic offensive. This is not just a trade dispute, it's a full-scale economic confrontation with global implications. Despite Mexico recently overtaking China as the top U.S. import source, America still relies heavily on Chinese goods, especially in electronics, machinery, and consumer products. The supply chains built over decades cannot be unwound overnight. Before this announcement, average tariffs on Chinese imports were already high at 40%. Now, they're set to soar to unprecedented levels, squeezing businesses and raising costs for American families. The timing is strategic, coming just weeks ahead of a planned leaders' summit. The move is seen as a high-stakes gambit, putting pressure on China while the world's eyes are on the negotiating table. The focus on electric vehicles is no accident. China has rapidly become a global powerhouse in EV production, threatening to outpace American and European rivals in the race for the future of transportation. By imposing a 75% tariff, the U.S. is sending a clear message. It will aggressively defend its industries, jobs, and technological leadership, even if it means higher prices and economic pain in the short term. This isn't just about tariffs, it's a battle for technological and economic dominance in the 21st century. The outcome will shape the balance of power for decades to come. The new measures will force companies to rethink their supply chains, reroute goods, and adapt to a new reality. For consumers, it means higher prices and fewer choices, as the world's two largest economies dig in for a long fight. The world is watching closely as the U.S. and China enter a new, more dangerous phase of economic conflict. Allies and rivals alike are bracing for ripple effects that could reshape the global economy. The stakes have never been higher, and the next moves by both nations will determine not just their own futures, but the fate of the global economy. The Trump administration frames the tariffs as a defensive response to what it calls Beijing's hostile actions, including aggressive trade practices and alleged intellectual property theft. Officials argue that these measures are necessary to protect American interests and level the playing field in a rapidly changing global economy. The 75% tariff on Chinese EVs is designed to shield American automakers from a flood of cheaper imports, which could undercut U.S. manufacturers and threaten American jobs. By making Chinese electric vehicles significantly more expensive, the administration hopes to give domestic companies the breathing room they need to innovate and compete. U.S. officials argue China's state subsidies and industrial policies give its companies an unfair edge, allowing them to dominate global markets by selling products below market value. This, they say, distorts competition and undermines the principles of free trade. The electric vehicle market is a key battleground in this economic rivalry, with China's affordable EVs threatening U.S. dominance in a sector seen as vital for the future. The administration fears that without intervention, American companies could lose their competitive edge in a technology that will define the next generation of transportation. Alongside tariffs, the U.S. is imposing new export controls on critical software and advanced technologies, directly targeting China's tech ambitions. These restrictions are intended to slow China's progress in high-tech industries and protect sensitive American innovations from being copied or exploited. This dual approach, combining tariffs with export controls, aims to contain China's rise in both manufacturing and technology, ensuring that the U.S. maintains its leadership in these crucial sectors. Trump has hinted at expanding these controls to other sectors, signaling a broader campaign against what he views as unfair Chinese practices if Beijing doesn't change course. This could mean even more aggressive trade actions in the future. The move also plays well with voters skeptical of global trade, reinforcing Trump's protectionist stance and appealing to those who feel left behind by globalization and foreign competition. Ultimately, the 75% EV tariff is both an economic weapon and a political message, signaling to China, U.S. industries, and American voters that the administration is willing to take bold action to defend domestic interests and reshape the rules of global trade. In response to escalating U.S. tariffs, China acted swiftly and decisively, signaling its willingness to fight back in the ongoing trade war. Beijing tightened export controls on rare earth minerals, a move that sent shockwaves through global markets and industries dependent on these critical resources. New regulations, effective December 1st, not only expand restrictions on key elements, but also target advanced refining technologies, making it harder for foreign companies to access or replicate China's expertise. China currently controls about 70% of the world's rare earth supply, a staggering share that underpins the production of electric vehicles, smartphones, wind turbines, and advanced defense systems. By limiting exports, Beijing is putting immense pressure on Western supply chains, especially those tied to the rapidly growing electric vehicle industry. Rare earths like neodymium and dysprosium are absolutely essential for manufacturing high-performance EV motors. Without a steady supply, U.S. automakers face rising costs, production delays, and a scramble to find alternative sources. China's move is a direct response to U.S. tariffs, leveraging its dominance in these critical materials as a powerful bargaining chip on the world stage. Unlike President Trump, who faces legal and political hurdles, Xi Jinping can act swiftly, unencumbered by domestic opposition or lengthy legislative processes. Beijing frames its export controls as a necessary defense of national interests, escalating the conflict beyond simple tariffs and into the realm of strategic resources. The rare earth squeeze transforms the trade war into a high-stakes geopolitical chess match, where every move could reshape global power dynamics. Both sides are now weaponizing their economic strengths, setting the stage for a prolonged and unpredictable standoff that could impact industries and consumers worldwide. The fallout will hit consumers and companies hard. Chinese EVs will become unaffordable in the US, reducing competition and raising prices for all buyers. The 100% tariff on Chinese goods means higher costs for electronics, furniture, and more. US automakers may benefit from less competition, but will struggle with rare earth shortages, risking production delays and job losses. Chinese exporters face factory slowdowns and layoffs as US orders dry up. Global supply chains will be disrupted, hurting companies and consumers worldwide. The pain will be widespread and lasting. Financial markets plunged as news of the trade war escalation broke. The Dow dropped nearly 900 points. Tech stocks were hit hardest amid fears over tariffs and export controls. Investors rushed to safe havens like gold and US Treasuries, signaling deep anxiety. Global markets followed suit, with losses spreading across Europe and Asia. Companies reliant on China saw their stock prices tumble. The volatility is likely to persist as uncertainty grows. The threat of further escalation and legal battles adds to the unpredictability. Wall Street now sees the US-China conflict as a major threat to global growth. The ongoing economic clash has triggered a deep diplomatic freeze, straining relations between the world's two largest economies. A planned Trump-Xi meeting at the APEC summit is now in serious doubt, further dimming hopes for any meaningful de-escalation. Both sides have hardened their rhetoric, making compromise seem increasingly unlikely as tensions continue to rise. The breakdown in diplomacy raises the risk of miscalculation and further escalation, with each side wary of backing down. U.S. allies are caught in the middle, forced to navigate a delicate balance between security ties and vital economic interests. The conflict threatens to paralyze global institutions and reshape alliances, creating uncertainty for the international order. The political consequences of this standoff may outlast the immediate economic damage, leaving a lasting mark on global relations. The world faces a perfect storm of economic disruption. Higher prices, supply chain chaos, and job uncertainty are now realities for millions. A rapid de-escalation is unlikely. Entrenched positions make a quick truce improbable. The most likely outcome is prolonged economic trench reform, with both sides decoupling and building new supply chains. The US will scramble to secure rare earths. China will push for tech self-sufficiency. The most dangerous scenario is further escalation. More tariffs, tighter controls, and a global recession. The world stands at a crossroads, with decisions in Washington and Beijing shaping the future. The next moves will determine whether we step back from the brink or plunge into a new era of great power conflict.